Hi everyone, hope you're very well. Hope you can see here that I'm in a beautiful view of San Francisco Bay. And actually I'm here to talk about Canada because I just flew into San Fran from Calgary. I think that we're not going to talk too much about politics and tariffs and everything else simply because, there's so much noise in every direction with that. Having said that, the clients are saying really what we've got to do here is think about the big macro themes as opposed to the micro, because obviously there's not much point in doing a deep dive on an individual company only to find that the whole tariff world has changed again. So as analysts, it's a very challenging environment, as it is for everyone, to really try and get in front of what's going to be the outcome of all of this. So in Calgary, I kind of came up with one answer, which is that if you look at what's happening here in terms of just the supply side of oil, there is a market share war that's starting. It's more or less been declared, but it's starting slowly, which is essentially the comeback of oil that's been off the market from OPEC Plus and particularly Saudi. And, basically a dispute within the members of OPEC Plus led by Saudi over who should be cutting back more oil, and the fact that they seem to be giving up on that and just saying, okay, let's produce all out. And the latest theory is actually they're going to announce a further increase in what was already considered to be too much incremental supply into a market which we think is still underestimating the extent of the demand downturn that we're going to get here. Now, of course, demand downturn is not going to show up immediately because, in fact, you have a surge of orders and pre-buying and late buying and buying before that's going on here, and it's really a panic buying syndrome that you tend to see, for example, in crises like hurricanes as regards gasoline. Everyone runs out and buys everything they can immediately, and then you have a much bigger collapse on the other side. But the transport data, for example, a client here said that the approximate statistic is that at the port of LA, for this time versus this time last year, throughput's up 50%, but for 3 or 4 months out, throughput's down 50% implicitly. So it's that sort of issue that we're facing in terms of getting it right on when this completely rolls over. But what's for sure is that OPEC is going to be adding barrels into a market that's already got incremental barrels from non-OPEC, for example, from Guyana, other mega projects that have recently been announced, for example, Chevron in the deep water Gulf of Mexico, into what we think will be a much worse demand downturn than the market's currently anticipating. And again, I think I told you on the last video, the market has got sort of a 40, 50, 60% chance of a recession here implicitly. We're at 100% here. My own personal view is there's going to be definitely going to be a major global recession here, regardless of what happens next. And a good example from being in Canada is just the massive change in behavior that the Canadians have gone through because of Donald Trump, which he single-handedly united Canada probably more than any time in its history. But at the same time, there's going to be a huge downturn in things like not only Canadian bourbon buying, but also Canadian tourism, et cetera, et cetera. They really are going to change their behavior. And even though the Trump tariffs effectively have been taken off the oil and gas sector, they don't just change their behavior back. The insults have been made. Trump stopped saying 51st state after he talked to Carney, but the fact is that 51st state concept, thought, and words are still out there, and you don't just turn around and say, oh, he stopped saying it, it's okay now. So there's obviously going to be a structural change here that comes from all of this uncertainty, and that's a negative. But the point about Canada was that, as we all know for so long, it has very low decline rates and a massive resource base. And the issue in US E&P has always been, and the unconventional has always been, very high decline rates and the dwindling resource base. If you're going to basically have to reset the US production level lower in order to balance the market with a price war with OPEC, what's going to have to happen is much lower activity, obviously, in the US. On our numbers, US production has to decline 2 million barrels a day, liquids, not just black oil, over the next couple of years just to balance the market. So a massive downturn from current levels is needed in order just to balance the market. And that's going to be a very painful process, which we think, based on the quality of the US E&Ps, their understanding of the situation, the much better balance sheets, the much more consolidated sector, they are going to do the right things strategically, but it's going to be an all but impossible challenge if the oil price just keeps going down until US production is in decline. So it's going to be a very tough results season for the US E&Ps as they manage a message from a position of already having low growth and low capex. Is there a way for them to incredibly further lower capex without going into decline, because once an E&P goes into decline in US unconventional, effectively you're slowing the flywheel, and then it takes an enormous, almost a triple, double, quadruple effort, whatever that is, in order to get the flywheel running fast again. So once we go into decline this time, we think with the productivity issues that you're facing in US E&P, which is less tier one inventory, progressively less tier one inventory, more of that tier one inventory concentrated in the hands of the big guys like Exxon, Chevron, and Conoco, what's going to have to happen here is going to be pretty dramatic for the middle set of US E&Ps, because they're going to have to go into significant decline, and the market's going to absolutely hate that. And the point I'm trying to make here overall is that the Canadians don't have that problem, because of course the Canadians, as we go into this down cycle, will be the beneficiaries of the major upcycle we get on the other side. They won't have declined because their assets don't decline. They have much more operational leverage because relatively higher fixed costs are also more sunk capex and less requirement for incremental marginal drilling when you go into the recovery mode. And of course, a major beneficiary of upside in oil prices, and the fact that the market may well at that point begin to discount a much longer life for oil, because as we said, if you want to call it a bonus, Tesla's EV sales were really the forecast for US EV sales penetration, and Tesla's sales are going very badly wrong. So that means you have much less EV penetration on the demand side of North American oil, at the same time as you have a major supply problem, which will be the declining US E&P business that's struggling to get going again because of much lower productivity from weaker acreage. Now, of course, don't forget US E&Ps are more efficient, so they can offset some of the productivity losses. But the reality is that we think that Canada will be a big beneficiary of this. We had a very impressive meeting with Rich Kruger, who's been a huge success at Suncor. And you can't help but think that all these companies are in very good shape in terms of the management quality. For example, Tourmaline or ARC. These are very good companies, very well managed, CNQ, with a lot of operational torque. And additionally, one final thing, very strong balance sheets with very high commitment to sustained cash return to shareholders. So it's a very long way of saying that we think that once you've been through this downturn, it's going to be very severe for everyone in oil and gas. When we come out on the other side into a fundamental bull run for oil and gas because of lower supply from the US unconventional, the Canadians will be the single most beneficial, the single biggest beneficiary sector within all the stuff we cover globally. Okay, have a great day.